Okay, good day everyone. We're doing the final video of our series, the fifth video on total analysis of Euro Australian dollars. We've identified our zones on the higher time frame, the weekly and the daily. We've identified our trend lines. We've defined them as well. We've identified our trend origin, as well as our market structure has been marked out. So now what's left to do is some real price study. So what is real price study? Real price study is the study of the cyclical or repetitive nature of price. Let me do something to give you a picture of that. So look at this. This is a textbook example of an uptrend, right? So what makes this cyclical or repetitive? Price goes up, price goes down, price goes up a bit, price goes down a bit, price goes up, price goes down, price goes up. That is a repetition. That is like A, B, A, B, A, B, up, down, up, down, up, down, up. So whenever price is going up, you know sooner or later it will go down. When price is going down, you know sooner or later it will go up. That is what I mean by that. So if you can grasp the exact point at which price starts to go down, or the exact point at which price will start to go up, then you will be able to say, catch a trade like this, where you maybe from here, you're able to take the trade up to here, to be able to catch the majority of the bullish move, or from here, or from here, being able to take the trade all the way up to down somewhere around here, to catch the entirety of the bearish move, to catch the entirety of the correctional move. So that is the essence of real price study. So study that's repetitive or cyclical movement, so that you can find, it's like a merry-go-round. It's like imagine all these movies where the actor is standing in front of one giant fan that's spinning very fast, and the actor has to like jump in at the perfect time. The fan is spinning around and around and around. It's a cyclical or repetitive movement. So the actor has to jump in at just the right time, so that he doesn't get killed by the fan, and is able to jump to the fan and get to the treasure, or save the damsel in distress, defeats the villain, whichever kind of movie it is, whichever kind of movie you have pictured in your head. So you get that that's exactly what it is in price. When it comes to trading, we are trying to find that accurate and ideal point where you can jump in and boom, make your first $1,000. So let's go down to the before we do that, let's price has gone impulsive, correctional, impulsive, correctional, impulsive, correctional. Price is in the correctional phase but seems to already be moving into the next impulsive phase. So what do I do? How do I take advantage of this? I go here. I'll highlight every correctional move that has occurred in the past to see if I can understand, to get a better view of what price is doing. I'm moving a bit fast now. So these are the previous correctional moves that price has made before the current correctional move. So what do I see here? I see a W pattern here. Let's make this line black now. See a W pattern here. I can now see impulsive, correctional, impulsive, correctional, impulsive. That's like the correctional structure. If I come down here, what do I see? I see a range, very, very different from what appeared previously. I see a range. I see a range. There even seems to be multiple levels of this range. There actually seems to be multiple levels of this range, but I can also draw the range like this, like this. Both of these are still accurate ways to have drawn the range. So let's delete this. Let's just focus on the larger time frame range. So here we have a impulsive correctional. Here we have a ranging correctional. So what should we be expecting? Here we seem to have a ranging correctional. Price went like this: impulsive, correctional, impulsive, correctional, impulsive. So since that's the case, let's go back to the first correctional move, which has the greatest similarity to this one. How did price end this correctional move and begin the next impulsive move? You can see a reversal candlestick pattern, green candlestick, doji candlestick followed by a big red candlestick. That's also an end pattern, right? Yeah, it's a small, very small end pattern. We also have another end pattern here, which facilitates the continual price drop. So we have an end pattern here at the peak of the. We have an end pattern there, and then we have another end pattern. We have another end pattern here, continuing. So you can see that. Do we see an end pattern here? Let's use our line chart. We don't. Actually, we do, but it's not an end pattern. It's a range. So I can see a range here. Price formed a range and then broke through to the bottom of the range, and price has continued bearish. Truth be told, what price is doing right now does not even remotely resemble any of the things that price did in the previous two price actions. So that means that there's nothing for me to project, nothing for me to predict. So in other words, no trade projections. So that's it for this video.